Okay, so 2023 has come and gone, and the year has absolutely flown by for me. It's actually hilarious. I was thinking about it the other day. As a kid, you feel like it takes forever for time to pass, and you're just outside playing each and every single day with your friends, and you really think that that lifestyle is never going to change, but your parents are always there to remind you with the phrase, just wait until you get older. I'm definitely feeling this statement right now, and I feel like December also just started, and now we're just days away from Christmas as well. But with that being said, I wanted to do a year in review of everything that happened in the Greater Toronto Area real estate market in 2023. So we're going to take a look at overall sales volume first, then we'll look at asset class wins and losses, then we'll go to prices, and then we're going to try to take a look forward and see what we could expect in the year 2024. When looking at the real estate market in 23, we've seen peak in home sales reach almost 9,000 units, which took place in May when the Bank of Canada held interest rates for 2 consecutive months in a row in March and April. May was also our strongest point in the year in terms of sales and prices, and 9,000 units in that month is a healthy volume. Our slowest month of the year was at the very beginning in January, where only 3,000 units were moved in that 30-day time period. So not a lot was happening at the beginning of the year. January was obviously our weakest month for sales and prices across the board in the 416 area code, and it's because that we were coming from a pretty uncertain time at the end of 2022. Keeping with the topic of sales, we are set to finish the year with the lowest number ever recorded since 2001. How crazy is that? In that year, there were only 67,000 sales occur in the Greater Toronto Area real estate market. Year to date, we're currently sitting at 62,500 units, and December typically doesn't yield that many unit sales as people are in Christmas mode and are spending time with family and friends. So maybe add another 4,000 units more to bring us to a total of 66,500, give or take. When you take a bird's eye view to the entire market, it makes total sense, right? Over the course of the year, most consumers or home shoppers out there were really wanting to see some stability in the economy where interest rates could settle before they would make their decision to hop back into the market. I definitely see sales increasing next year in 2024. CREA also shares that same sentiment. CREA stands for the Canadian Real Estate Association, but they're projecting that we will see an increase of almost 11% in home sales. So it's clear that 2023 is still a very different story from 2021 and 2020, where we saw 121,000 and 95,000 units move respectively, but continued immigration and less pressure from an interest rate standpoint, making affordability a little easier to achieve for consumers, will give us a little bit of a rebound here in the home sale category for 2024. This is a quote from Tiff Macklem, who is the governor of the Bank of Canada. On December 18th, he said, "We are certainly feeling more confident that monetary policy is working, and increasingly the conditions are in place to get us back to 2% inflation. We're not there yet. There are a few more things we need to see to be more confident that we're headed back to 2%, and we're watching those closely. I think it is sometime in 2024, and this was in response when he was answering questions about when the bank will start cutting that overnight lending rate. In terms of winners for the year, I would say that those that were able to jump up the property ladder between asset classes, so from a condo to a freehold product or a townhouse to a semi-type deal, came out on top. Those were the winners in my mind. And this goes back to the detached market actually dropping the most and being more volatile at certain points of the year. So some people could really take advantage of that situation. Okay, so moving on to prices, I think that this category definitely shocked people the most in 2023, and here's why. The GTA real estate market as a whole only experienced a 5% drop in prices in 2023 when compared to 2022. Keep in mind that this is excluding December data for this year, and this is for all asset classes combined. In terms of peak prices for the year, that definitely came in May, as I said at the beginning of this video. Again, sentiment really did change on a dime when the bank held interest rates. So with a 5% drop this year, that still leaves us 37.8% higher than the average price in 2019, where that number came in at $819,000. It's also really crazy is that it's largely agreed upon that home prices here in Canada will see increases next year in 24. Royal LePage had the most bullish take, I would say, by forecasting that single-family detached homes in Canada will increase around 6% per year, while condos, they have projected to grow by 5%. Again, these are only their projections, so keep that in mind. Other experts that were a little more bearish maybe have forecasted a more modest increase of around 3% per year. The Canadian housing market as a whole is just so sensitive to interest rates, so next year in 24 it'll be really interesting to see what happens. The wild thing also is that if we do experience growth in between these numbers, so take 4.5% for example, that puts the GTA housing market up to an average selling price of $1.179 million, which actually does return us to that all-time high point that we experienced in the pandemic. The asset class that was actually the most volatile throughout the year was that detached market. Those had a high point selling price of $1.9 million and a low of $1.6, which actually came in November, rounding out the year with an average price point of $1.7 million. Semis were in second place with a high selling price point at $1.4 million and a low of $1.217 million, averaging out the year at a selling price of $1.28 million. Condos and townhomes were a lot less volatile, and condos traded at an average price of $740,000 here in 2023 and had an average percent change of 0.16% on the year. People that lost in the Canadian real estate market in 23 were investors that may have been caught on a variable rate and were over leveraged. Keep in mind that this is a very different story from an end user having a variable rate and finding ways to make ends meet, because remember, you cannot lose if you don't sell your product and you continue paying down that mortgage. These people have also likely adjusted to the higher payments that they're paying right now and won't feel that same type of payment shock as fixed mortgage holders would when it comes time for those people to renew their mortgage in the next couple of years. My name is Trey. As always, I hope that you enjoyed the video and got one piece of value from it. Remember to trust the process and fall in love with your journey. I'll see you in 24.